as the world waits for the results of this week's Federal Reserve meeting. The expectation is that the Fed will keep the ultra-low interest rates that were put in place in response to the pandemic. But with consumer prices rising more than expected, it raises questions about how the Fed will respond and whether inflation will truly be as transitory as they say it is. So joining me now to go further in depth on this topic are Boombest co-host Christy Ai and Michelle Snyder, partner and director of trading research and education for the Market Gauge Group. Michelle, let's start with you. So what are markets expecting to hear from Chairman Jerome Powell at this week's meeting? I mean, is there any chance that they could be forced to walk back those claims of inflation being merely transitory?
Well, at this point, what they're basically been saying is they expected the economy to run hot with the reopening. They expected elevated prices through the summer, and that's where the transitory is coming from. When we just saw the recent numbers on core inflation, basically the 49% of it was used car, rental cars, some housing, and also airline travel and hotels. But then when you look at the full CPI, that includes energy and food, and that's really what has been the biggest concerns going forward. So I don't believe that the Fed still thinks that this is anything more than transitory. And of course, that remains to be seen what's going to happen here. I, of course, myself believe that it's more than transitory, particularly when you're talking about the food commodities that have been skyrocketing for reasons other than stimulus and other than government spending and all of the buzzwords that you hear faulting the rise of inflation. But the Fed is in a real pickle, and that's not going to go away. If they put the brakes on now, then you're going to have a market that will decline very, very hard. It will hurt the consumers on both ends because interest rates will go up and inflation will happen anyway unless they go crazy, and that's not really likely to happen. The other thing to watch for is that the global economies, they haven't really started to come back yet. They're still dealing with variants there. So we're really even talking about inflation United States. Once that demand opens up more globally with the short supply that we've had, partly because of supply chain, partly because of low labor, partly because of stimulus, and partly because of government spending, things could really explode. At that point, maybe the Fed will have to do something.
Yeah, you truly have a lot of moving parts there with other countries looking to the U.S. and then the U.S. having to look at the global supply chain and just how everything moves together. Now, Christy, while we're here, I want to talk about Bitcoin. I know it's been a good day for the most popular cryptocurrency, and we're also seeing that Bitcoin now has a new champion, hedge fund legend Paul Tudor Jones. So how is he viewing crypto?
Well, Tudor has long been an advocate for Bitcoin and its anti-inflationary properties. So now he's planning to go all in on the inflation trade if the Fed keeps on ignoring higher consumer prices. However, on the other hand, if the Fed does come out on Wednesday with a different tone and is more hawkish, then the markets will be unsettled and you will get this taper tantrum. So Powell has currently maintained a highly accommodative monetary policy approach and has reiterated that these rising prices are temporary as the economy reopens. But Tudor doesn't believe this and instead now is turning to Bitcoin, calling it a portfolio diversifier and a story of wealth. He calls the Fed disingenuous for referring to inflation as transitory, which undermines market faith in central banks. On the other hand, Bitcoin is math, which is more reliable, consistent, and honest versus policymakers, which creates rules and policies consistent with greed and human nature. So Bitcoin today is definitely getting a boost up to around 40,000 from the inflation trade as it's increasingly being regarded as an inflation hedge, very similar to gold. So more and more hedge fund managers are coming out in support of it, including Stanley Druckenmiller and Ray Dalio too. So I think this rally should be attributed to these guys who are actually coming out and buying and accumulating Bitcoin rather than someone like Musk very recently who just created Twitter drama and sells Bitcoin as this market experiment.
Yeah, and we certainly keep hearing those comparisons to gold, especially whenever it comes to concerns with the U.S. stock market. Now, Michelle, world stocks are near record highs as hopes of lockdowns are lifted. I mean, are expectations for reopening trade already all baked into the market? And where do we go from here? I mean, surely stocks can't possibly keep on going up and up forever, right?
Well, valuations are definitely high. There's no doubt about that. And if you're looking right now, there have been rotation back into growth stocks, and that's because of the fact that the yields have actually come down. Today they went up a little, but for the most part they've come down. So in terms of whether or not the reopening trade is baked in, I'd say yes and no. I think we'll have different stages. Some of it we're already seeing. How much further, though, can energy prices go? That again is going to be a lot to do with what happens globally once those countries start reopening. Also, how big the vaccine rollout will be. So we'll see pockets that may have gotten overvalued, like, for example, the housing industry may be overvalued, but others that really still have a long way to go. And essentially, here's what I like to tell people. If you want to know what the Fed is doing, you just have to watch junk bonds, either it's HYG or JNK, because that's been the folly of the Fed where they're doing the bond buying program. If you want to know what the market is saying about the economy, you don't look at the growth stocks. You look at the Russell 2000, because that's manufacturing. You look at retail, because obviously we're a consumer economy. And you look at transportation, because that tells you how goods and services are moving. And right now, they didn't go up in tandem. They have to keep up. So those are your warning signs to watch for.
That's an excellent point and good warning signs to look out for. Now, Christy, before we go, I know you mentioned Elon Musk. We're seeing that he is trying to backtrack once again, saying that Tesla would resume allowing transactions when Bitcoin can confirm that 50% of its energy for mining is derived from clean energy sources. What do you make of that? I mean, is he back to trolling once again?
Exactly. I think given this latest tweet, it's simply a very sad excuse to try to walk this statement back, given that no one knows exactly how to measure 50% clean energy usage, let alone precisely where miners are geographically located. So right now, studies indicate that the goal could already be met as researchers have been looking into the number of miners which leverage renewables for some time now. As of June 2019, reports show that 74% of the Bitcoin mining industry is heavily driven by renewable. Another independent report published in May detailed that Bitcoin's network energy consumptions are misguided and that Bitcoin's carbon footprint is a silly argument compared to that of consumerism and binge streaming Netflix. So on top of that, it's absolutely impossible to track and pinpoint the locations of miners. I mean, that's the entire point of a decentralized verification system. So if one cannot truly estimate where all the Bitcoin miners are located, then how do we know if the 50% of the energy is even clean? So if we trust the reports and studies that we have today, then the 50% mark might have already been met. So this is the latest attention-seeking tweet by Musk, which really isn't worth a dime to divert attention away from the fact that the Bitcoin Mining Council has now gone live as of this weekend with Michael Saylor of MicroStrategy as a founding member, while Musk is booted off.
Wow, another day, another comment from Elon Musk. Christy, Michelle Snyder, thank you both so much for your time and insight.
Thank you.